Hey everyone, and welcome back to my channel where we discuss everything related to investing. Be fearful when others are greedy, and greedy when others are fearful. This is a famous quote by Warren Buffett. This quote has become a guiding principle for many investors who believe that buying when others are selling, and selling when others are buying, can lead to significant investment opportunities. However, in order to apply the principle, we have to know how to determine market sentiment and investor sentiment. So, today we will discuss 3 simple tools that we can use to determine the market sentiment in this video. First tool we can use to determine the market sentiment and investor sentiment is put-to-call ratio. This ratio measures the number of put options compared to call options, and it can be a useful tool to determine whether investors are more bullish or bearish on the market. A high put-to-call ratio typically indicates that investors are more bearish and are buying more put options to protect themselves from potential losses. Conversely, a low put-to-call ratio suggests that investors are more bullish and are buying more call options to profit from potential gains. This table shows the put-call ratio for March 3rd. The total put-call ratio is 0.91. However, the put-call ratio which we should focus is the equity put-call ratio, which is 0.59. Historically, a ratio greater than 1 suggests that the market is more bearish and that we might approaching the bottom of the market. On the other side, when the ratio is less than 0.5, the market is overly optimistic. The second tool is the VIX Index. Also known as the Fear Index, the VIX measures the market's expectation of volatility of the S&P 500 index over the next 30 days. A high VIX indicates that investors are more fearful and expect more volatility in the market. A low VIX indicates that investors are more complacent and expect less volatility in the market. In addition, the VIX index can also be used as a contrarian indicator. When the VIX is at an extremely high level, it may indicate that the market is oversold and due for a bounce back. Conversely, when the VIX is at an extremely low level, it may indicate that the market is overbought and due for a correction. The third tool is CNN Fear and Greed Index, which is a popular market sentiment gauge that measures the emotions and attitudes of investors towards the stock market. This tool is based on 7 key indicators that are weighted equally to provide an overall score ranging from 0 to 100. A score of 0 indicates extreme fear, while a score of 100 indicates extreme greed. The 7 indicators used to calculate the Fear and Greed Index include stock price momentum, strength and breadth, put and call options, junk bond demand, safe haven demand and market volatility. When the Fear and Greed Index is below 30, it suggests that investors are exhibiting fear and the market sentiment is bearish. At this level, investors are more likely to sell their stocks and move into safer assets such as bonds or cash. This can lead to a downward pressure on stock prices. However, in order to apply the principle of Warren Buffett, this is the time that we should plan to buy the stock while others are selling. On the other hand, when the Fear and Greed Index is above 70, it suggests that investors are exhibiting greed and the market sentiment is bullish. At this level, investors are more likely to buy stocks and take on more risk in the hopes of earning higher returns. This can lead to an upward pressure on stock prices. The CNN Fear and Greed Index is a useful tool for traders and investors who are looking for a quick and easy way to gauge market sentiment. By monitoring the index, traders can get a sense of whether investors are feeling optimistic or pessimistic about the stock market. This can help them make more informed investment decisions and adjust their strategies accordingly. If you have other opinions, let's comment below. Please help to like and subscribe.